Good morning. I'm Maurice Crespi, Managing Partner of Schindler's Attorneys. Schindler's Attorneys is a co-founder of COBRA, COBRA having been founded by Schindler's, IQbusiness, and Engaged Business Turnaround. The idea behind COBRA is that we provide assistance to companies on a shared value basis, from a spaza shop level all the way up to big business. We do so by providing assistance through our network of partners. We now have in excess of 65 partners who are there to assist any and all businesses in distress. We do so by way of private Zoom sessions with you and your team. We do so by assisting you through a business rescue process if required. If a business rescue process does not work, we do high court applications for you to convert the business rescue into a liquidation, and we do so for free. We also have a knowledge base provided and put together by Sifiso, who will be talking to us today. A knowledge base has absolutely every piece of resource that you'd need to navigate through these trying times. So please go to the website www.cobra.org.za or send us an email, info@cobra.org.za. As part of the service, we provide these daily webinars. We won't be having one on Monday because it's a public holiday, but we will be having another one on Tuesday. So before I hand over to Sifiso, let me introduce the remaining panelists. We have Emma Marseille from IQbusiness, Adam Kraker. Adam is the CEO of IQbusiness and the CEO of COBRA, so it's a privilege to have him on today. Gary Barachowitz from Schindler's, Renee Klopper from IQbusiness, and of course, Sifiso, the Chief Economist at IQbusiness. I'll be handing over to him. Thanks so much, Sifiso.
Thank you, Maurice. I'm unable to share my video, but I'll share my screen. So I guess on the back of some of the conversations that we've had around just kind of the state of the economy, state of small businesses in South Africa, and there continue to be pieces of work that come from, I think, a number of organizations from Stats SA. They have released a number of COVID impact pieces around how businesses, particularly small and medium-sized businesses, have been impacted. We've also seen research coming out of TransUnion, and again, they were looking at the financial impact that some of the businesses, particularly small and medium-sized businesses, have had since the pandemic. And my thinking then was that how do we see the way in which small and medium-sized enterprises are located in the context of the economy, and what are some of the salient items that we just have to see in context, I think, as we continue thinking around SME participation in the South African economy and the value that they create. And so I thought maybe for this week, let's take the chance or take the opportunity to just profile the SMEs in South Africa and locate them, and then have some discussion around some of the salient items around where and how they're located. There's an annual piece of work that comes out, and I've just pulled out a few things there that are quite interesting. The GlobalEntrepreneurship Report, and maybe let me start with this side. This Global Entrepreneurship Report, in essence, usually just talks around the state of entrepreneurship, the state of business, starting and closing in the context of the global economy, and then it takes a view into the regions as well as then into a country-specific focus. And this is an important slide for me for the rest of the conversation. If you just look at the bottom first and see where South Africa tallies up in terms of how many early stage businesses are being established, in comparison to I guess, the clustering, which is Middle East and Africa. I think if you then go up to the top, I think what's even more concerning is around the percentage of those businesses that are established. And you see that number being significantly low. And I think that certainly then should give us, I think, at the first instance, a sense of the vulnerabilities that small and medium-sized businesses are exposed to in South Africa, but also clearly the market structure that doesn't lend itself to more sustainable participation of SMEs. And hopefully, I think from this kind of conversation, we can have follow-up conversation around what kind of market structure would be conducive to see that established business rate numbers start to tick up, and us as COBRA partners, seeing what we can do to play our part to enable that number to increase over time. And so I think it's one of the things and one of the numbers that we should be observing over time as we continue to drive our initiatives through COBRA. So what we're seeing here, and for me, this business discontinuance and this established business ownership rate comes back into this discussion. We're seeing the exit rate in terms of businesses in South Africa has decreased since 2017 from 6% to 4.9%. But again, that is still faster than or larger by the size of the established business ownership rate. And I think what you ultimately want to get is you want to have less businesses exiting and more businesses becoming more established. And I think this is why I think these two metrics were of particular interest in the discussion in terms of just introducing the discussion and see how we follow on going forward. So then in saying, well, how do we map these SMEs and in the context of the South African economy and start to look at, I guess, the numbers? And I always say is that we must always try to err away from starting with statistics and using those statistics to tell a story. I think there's it usually is more valuable to tell the story and use the statistics to ground that story. And in essence, the story that's broadly been provided is that SMEs are still large employers in the economy, and then we see there by jobs provided estimated about 11 million out of is 16, close to 17 million labor force size. And so already just by virtue of that number, you can see the extent of its contribution to job creation. And I think also what's quite interesting is to then look at where does that sit from a sector point of view. So trade and accommodation, 40.6%, community service, 13%, and then you've got construction, 14.2%, and business services, 13.4%. And then when you just think around the structure of the South African economy, as well as how then we have been impacted by COVID. So tourism, I think, by I'd call it direct and indirect assessment of its contribution to GDP was close to about 10%. Then if you look at trade, and that's retail trade and wholesale trade, their contribution to GDP is slightly more than that. And so when you combine those two, the general sector contribution to GDP is probably close to about 26, 27%. So when you look at how many SMEs are in that sector and the absolute contribution of that sector to GDP, I think that's the first thing to just keep in mind. And so I think it also lends itself to kind of the skills profile that we've tended to see in the SME space, where a good portion of the people are either semi-skilled or unskilled, even in this space. and therefore the certain sectors that lend themselves, I think, to more participation of that kind of labor force, and tourism is one of them. And so when you look at, of course, the fact that there's been little activity happening in terms of tourism in South Africa, and the ancillary services around that, and 40% of the businesses are in that sector. Then when the numbers that are modeling the unemployment since lockdown, we had done our estimation that for the year 2020, we expected job losses of 2.9 million and the yearly economic contraction of about 17.9. And some of the other reports that are coming out already are saying to date, since the lockdown, there's been 3 million jobs lost. And so when you think about that and you think about it in context and say, well, if 40% of 11 million or 11.5, 11.6 million participants have had a very hard time participating in the economic marketplace, that number can start to look a little bit more reasonable. You can see the thinking around how that is actually possible and how it's not ridiculous. And the same applies with community services and household call it services. We know, of course, that it took a while for domestic workers to be able to work. And in the informal sector, we know that one of the largest sectors there is personal care, which is, hair salons, nail boutiques, etc., largely women dominated. And even those ones only now started participating, as of a few weeks ago. And so again, when you think about that story, and then you see these numbers, things start to make sense around just the sheer impact that we have seen on small and medium-sized enterprises in the context of the economy. I think what's quite interesting then is that last number around, what's the contribution of SME turnovers to the size of all enterprises, and the various, I guess, contestations around that number, but this is coming from CEDA, and they're estimating it at 37%, close to 40% by turnover. But I think, again, when you look at the tax statistics, which then imply, of course, that we're not looking at turnover, we're looking at taxable income. I think the picture starts to get a little bit more bleak in terms of SME contribution to GDP. And so again, these are some of the things that we must be asking and say, there clearly are gaping holes and there are gaps and the fault lines, and what does it mean for some of the work that we're doing here, even in the COBRA platform, that we start to be deliberate about actually closing some of these holes and say, what does it mean if we want more businesses to be larger taxpayers? What do you actually need to put in place? And I think we often think that things follow. So if a business grows and then it will contribute more to GDP, well, it may or may not, for example, depending on the capital structure, how largely geared is it, or how, and all of those things, because ultimately its contribution to the tax base comes off taxable income. So these are some of the things I think that are going to be important questions, even when we think about our partnership structure through COBRA, to say, how do we, through this particular channel, ensure that we are putting the right things in place to get businesses onto the right growth trajectory. And then, there's a view then around, well, how old are the people who are running businesses in South Africa? And we can see that there's that middle age space there. As soon as the guys are coming out of the youth league, they're establishing businesses. So it's seeing from about 30 to about 49 is probably, call it the hot zone, hot spot in terms of the demographic of people who are starting businesses or who are business owners. If you look at that in context and say, well, what's the likely profile of that person? That person is probably a young family starter. So there's a whole lot of ancillary pressures around the need for this business in essence to be sustainable. And if you look later in terms of the older range in that bucket, it's people who want to then kind of wind down so that they can get into a lot more comfortable type of a retirement space. And so, which means the kind of support that you're bringing will change to the participants in the age group, maybe 30 to 39, to the participants who are maybe 40 to 49, just by virtue of also their life stage and how then how their appetite, for example, for risk taking may change over time. And so when you are, for example, having merger conversations or funding conversations, how do those differ also by virtue of the risk propensity from a demographic point of view of these small business owners? And I think that's, I think, an important thing that we must also keep in mind in how we think about the work that we're doing through the COBRA initiative. And then this looks at the distribution of the businesses by age, enterprise age, and we see, interestingly enough, that the kind of the largest clustering is businesses between 6 and 10 years and 11 and 20 years, which is actually quite surprising. If we are also looking at the number, or when we look at the research that shows us that the number of mature businesses are, below 5%, but you're also looking at enterprise age of, between 6 and 20 years, and that's I think clearly telling us that there's a gap in the data. There's something that the data is not telling us. It's either that there are businesses that are dormant, and then they show, for example, at SIPSI that they're 7 years old, yet they've only been truly operational maybe for 3. And those are some of the things that we need to get closer detail in, because as we are seeing that the quality and the maturity profiles and sustainability profiles of businesses in South Africa, SMEs in South Africa, is still quite low, materially low, particularly lower than a lot of the regional as well as global averages. I think when we look at this at the first take, again, it's quite an interesting one. It seems quite representative of how the economy is currently split. So Gauteng currently contributes about 34% of GDP, of the country's GDP, followed by KZN at 16%, and then Western Cape at about 11%. And so if you look here again, the numbers seem quite representative, with the exception of Limpopo, Gauteng, KZN and Western Cape in terms of the split. And Limpopo there is quite interesting in terms of its contribution to SMEs in the context of the South African economy, given the fact that their province isn't the 4th largest province, for example, in South Africa. I think there's, again, for me, that's telling us something around maybe that the environment in Limpopo is actually a little bit more conducive for SMEs to operate on a sustainable basis. And that's why we're seeing that kind of representation. This picture, however, gets even more interesting when you look at by sector and by province. And here, there are, of course, things that will be more surprising and less surprising. So, for example, Eastern Cape and Limpopo, from an agri point of view, are unsurprising. But by virtue of the fact that both provinces are largely agri-driven economies, yet Limpopo is still doing significantly better by this metric in terms of just the number of SMEs that are able to operate sustainably. I think, again, this is something that's telling us something about the sustainability of the infrastructure and the ecosystem around, for example, the Eastern Cape, that makes it a little bit more difficult for SMEs to operate sustainably. Outside of that, we continue to see, the sectors that I think are unsurprising, as I said, is that trade and accommodation. You'd expect to see those in a lot of the kind of tourism driven sectors. And you're seeing that in Western Cape, you're seeing in Eastern Cape, you're seeing KZN, of course, Gauteng. And business services, again, would expect quite naturally for that to be largely dominated by Gauteng and Western Cape. And I think for me, what this picture tells us in a more interesting way, and you're seeing again Limpopo coming out there with manufacturing, is that that's not an intuitive thing that we would have thought, that Limpopo would have been the province with such a large proliferation of manufacturing activity. Yes, there's the mining sectors there also, but again, one wouldn't have imagined that this would be the size and the proliferation of our small businesses there, which means then that we've also got to have a spatial contextualized view around some of the things that inform the sustainability of these small businesses. And I think that 40,000 for small businesses coming out of Limpopo for me was probably one of the most interesting numbers to come out of these data points from the quarterly labor force survey from Stats SA. And so this is just a first stab at just understanding, saying, how are the SMEs located in South Africa? What are they contributing in the context of the economy from a sector point of view? And how does that contextualize, I think, to the ecosystem around that to ensure that these organizations are able to operate on a sustainable basis? And so that's certainly, I think, the conversation for today was really around just to help us get to a more contextual view around SMEs and the landscape thereof.
Excellent. No, that's brilliant. I see there are no questions. I think that's pretty much a wrap. I'd ask the audience, if they have any questions, please post them now. There we go. We have one that's about to arrive.
Maybe I should just ask it.
Yeah.
Quicker than typing. Sifiso, what rate do you think the economic activity is going to start increasing as the COVID peak kind of starts to plateau and decline? Because we've seen the rate of infection slowing down. Do you think that the economic activity is going to start picking up quicker, or do you think it's going to be a slow uptake?
I think it's going to be a slow, drawn out pick up, and I think the primary reason is because I think now we're no longer disillusioned about the health or the true health of our economy, and we've tended to see more synthetic pickups that aren't actually truly reflective of the economy actually recovering. And I think now the fault lines have been drawn, and the pace at which unemployment is trickling in, I think certainly is pointing that even within a 4-month period, businesses are unable to see the long-term viability of their models. And we also saw the numbers coming from BankServe from an employment point of view, that earnings, I think was the June earnings that are down by, in terms of salary payments, they're down by 20-odd%. And so in essence, that would suggest either a fifth drop in terms of hours worked, or a fifth drop in terms of kind of active labor participation. And so that's suggesting already, if that continues, a contraction of the economy just in excess of 20%, and that would be probably about 3.1 or 3.2 million jobs lost in the year by the year end. And so I think the recovery will be slow. We can see that we've got challenges in terms of the small businesses and their ability to participate sustainably because of certain industry challenges and industry concentration, as we've spoken about it here before, being one of the challenges, which makes it easier for bigger businesses to help out smaller players. And we also just haven't used legislation well in a way in which it can be a capacity building tool. I think we've often called it stick, and we think of sticks as something that you use to give a beating, but you could also use a stick to build a thatch house. And I guess these are some of the things that we should be thinking around, is saying, how do we use legislation as a capacity building tool for better and more sustainable participation of small businesses. But as I said, I think some of the sectors in the restauranting and in the tourism, accommodation, and all ancillary sectors around that have taken a very big beating. And when we see that 40% of SMEs are participating in that sector, I think it's going to be increasingly hard for them to pick themselves up. And that's one of the reasons why I think that the pickup from an economic growth point of view is certainly going to be a slow one.
I see we have a question from Adam. Do you think SMMEs are participating in the digital economy? What more can be done to ensure that they do?
Yeah, there are two ways. I think there are positive developments coming from government around the digital platform they've created for being able to register a business, file for your tax returns, and all of that stuff at one place. I think e-government in general would be a very big enabler for a digitally engaged SME sector in South Africa. And so there's more that we need to do to encourage I think a faster acceleration and a faster pace towards a more established e-government. Outside of that, in the various sectors, I think certain sectors lend themselves to more digital participation and more digital enablement than others. And one of the things that I suggested, actually, interestingly enough, and when we think about the fact that a lot of the businesses here are in the trade space, is when we were at a hard lockdown or stage 5 hard lockdown, I said, well, if you are allowing, for example, e-commerce to take place, and you know that other traders who would otherwise be trading face-to-face with people are unable to do that, why don't you get into conversations with the established e-commerce players around creating a platform for the emerging guys to be able to play. We saw Telkom has recently launched, I think, something called Yep, and it's an app and a web-based platform for small businesses to be identified. So it's literally around small businesses for them to be found there. And so anyone who wants to trade with small businesses can go to this Telkom app or Yep. And I think, again, that's just one of the things of identifying that in these bigger apps or in these bigger marketplaces, small businesses do get lost. And sometimes you need a technology partner to enable them to have more visibility in terms of all the other things, in terms of search engine optimization and all these things that businesses wouldn't otherwise know or have. And so I think there's a lot of knowledge, there's a bit of a knowledge in terms of businesses and their ability to play in the digital economy. And over and above that, I think there's a resource challenge as well in terms of just being able to access certain marketplaces, and a digital marketplace for a retailer is actually not the easiest one to access in terms of getting the right level of scale. And this is why then some of the established businesses maybe can be encouraged and incentivized in one way or another to promote more broad-based participation in those ecosystems. And I think that would be quite valuable. And so it's certainly a challenge that I would continue to bring towards both policymakers as well as the larger players in those spaces to see if they can find each other in that conversation.
Another great question here by Adam. Before SA has launched their economic recovery strategy a month ago alongside the plan from government, both identify SMMEs as key to our economic future. However, after a month, there's no sign of any action or leadership from government on either plan. What can SMMEs do to organize, like taxi drivers, to get action?
Yeah, I think we've certainly seen enough economic plans and master plans and strategies, to last us a good lifetime, I think, as South Africans. And a lot of the rhetoric is the same, right? Is that we want to promote labor-intensive sectors. We want to promote youth participation. We want to help grow SMEs. But the challenge for me is that we're not going to progress there if we haven't diagnosed sufficiently well the challenges that are actually faced by SMEs. What's the spectrum of funding challenge that SMEs are faced with, right? I think businesses at different phases are faced with a different spectrum of funding. Do we know that? Do we understand that? So that we don't just throw money at a problem. So we're launching an SME fund that then people can't access because they need 5 years experience or a track record or whatever the case is. And so I think we've tended to kind of have a spray and pray approach in how we bring some of these programs to life, and say, oh, funding is a constraint, and so let's pull a fund together. But the different kinds of businesses who need different kinds of funding structures organized for them. And so these are some of the things that for me are not coming out strongly enough in the way in which both public and private sector participants who are working towards supporting SMEs are not unearthing. And therefore, I just worry that some of the interventions will not have the right level of efficacy towards advancing the improved outcomes for sustainable SME participation in the economic marketplace. Over and above that, the question is around then how do small businesses organize themselves? And I think the digital opportunities are starting, I think, to offer an interesting amount of value. And it might even be something as simple as a Facebook group, where then you almost organize yourself as a tourism cluster, and then try to see how do you either use that platform to share with each other opportunities that come and go, that you in your immediate space are able to see, but also to organize your thought and saying we are writing a combined view around what needs to happen from a tourism point of view to make sure that the sector grows. I think the industry participants know the industry is way better than the policymakers, and so I think they ought to do more to share information around the things and the levers that would be their most valuable levers to drive growth. I think sometimes we do tend to find also that the tonality around that is that says, no, give our industry space. What does space look like? Or give our industry money. What does money look like? What does, So give us the context that will inform that, beyond just saying that the sector is a good participant in the economic marketplace. So I think there's got to be a lot more constructive engagement from small business owners, from a value point of view, and saying, actually, these are the value points coming from our sector, and this is how it contextualizes to all of the ambitions for the economy in terms of absorbing young women, absorbing young Black people, and also ensuring that it's able to drive the labor absorption imperatives of the economy. And so those are all the things that I think would be quite valuable in terms of how we think about our own voice as small business owners in driving the imperatives. I make the example and saying there's something really interesting that we always talk about in the economics, which is called nudge economics. And the example that's a very interesting one for me right now is this thing of the universal basic income, right? Where in South Africa, a study was commissioned in 2002, and it came out with recommendations that it ought to be phased in South Africa. And 2015, I remember we were submitting again contributions around the need for this thing to come. And fast forward to 2020, where the fault lines have now been amplified, and we're still pushing and saying that this is something that is relevant and necessary for the economy. And then now you're getting solicitations from the presidency. They're saying, Sifiso, have you looked at funding models for this that can be budget neutral? And so now you're starting to see that we've been able to nudge them in the right way. But the nudging hasn't happened by saying government is failing its people by not giving them universal basic income grant, rather than saying that these are the value points around the existence of a UBI. And this is how we nudge policymakers into taking things seriously, into understanding the context that will inform this kind of participation, as well as this kind of growth. And so I'd certainly challenge and energize everyone in the room as well to think around how do we approach nudge economics in the way in which we want to promote sector imperatives, particularly in the sectors in which we operate.
We have another question from Adam, which is, your response is going to be really interesting. Illicit sales of cigarettes, alcohol, and PPE by entrepreneurs demonstrate we have exceptional SMME skills. How can we harness these in a productive direction to grow our formal economy?
Yeah.
And you can tie that in, interestingly, with the fact that there has been an informal economy when it comes to marijuana for decades now, and it's worked.
Yeah.
So yeah, can throw that in as well.
Yeah, and interestingly enough, just to even, I guess, lament the point of just how brilliant they are. South Africa is literally the only country in the world where contraband cigarette has sold more than legally available cigarettes. Only country in the world. And therefore, the formal economy is clearly quite active, and they're good at what they do, the informal economy. And so I think I made the example around, I guess, our failures in our inability, particularly from a policy making point of view, to recognize the true growth levers in the economy. So if we can see that the profile of informal economy looks like personal care for young women, broadly speaking, it looks like mechanics and auto bodies for young men, and taxi and the taxi industry, as well as then ancillary retail sector. That's literally been something that we've known that is the shape of the informal economy for the last 20 years. And therefore, when we are thinking around capacity building, and we know that BMW is looking at launching a BEE fund to enable their OEMs to grow. But the OEMs are part of an entire ecosystem where they're making parts, but there are also people who service cars and so how do you not then look at these young people who are so good at being car mechanics and bring them into an organized structure where they're servicing on behalf of secondhand BM cars, for example, or whatever the case is. And all of a sudden you've created a base, I think, for the kind of growth that we've already see happen in an organic basis. And so the same thing with marijuana, and the same thing applies then with food retailing as well. And so I think that's certainly one of the things that we've missed as opportunities and as lever points to be able to drive more sustainable and more inclusive growth. And I think to also enable these fledgling SME businesses to become a lot bigger because of the kind of marketplace in which they've been graduated into. From an agriculture point of view, I remember some years back working what eventually actually became the blended finance white paper that went to Parliament in 2015. And in essence, the view was that there are many programs currently undergo that are giving some funding mechanism, some funding mechanism for some farming enterprises in various capacities. And there are also institutions that are giving commercial funding for farmers. But a lot of the emerging farmers can't access those facilities because they're too expensive. Then the thinking is around bring those two sources of funding and you dilute the risk. And so you reduce the amount of risk because you put some concessionary funding, grant funding, as well as commercial funding. And then that can be the kind of funding that could be accessed by small and medium-sized enterprises. Over and above that, then you create what we would call a farmer clustering model, where you've got an established farmer who's got other farmers within a proximity of 15 kilometers. You capacitate the established farmer to be able to help the others in terms of their crop management, their storage, their transport, etc., to get them to the right scale. And so even in the way, and that's a model that we can borrow in how we help SMEs. And this is why I was talking about the e-commerce and say, imagine this clustering model for e-commerce. And so we've got all these small, knitters and textiles people and food sellers, etc. And we create this cluster model and incentivize this big established player to open the marketplace for these guys to grow sustainably. And I think these are some of the ways in which we can create more sustainable participation from informal economy into more formalized economic structures.
We have a question from Joanna. In the next 3 months, what sectors, products do you see entrepreneurs being able to survive in?
3 years or 3 months?
3 months, but let me ask you 3 months and 3 years. Let's talk short term and long term.
I think from a short term point of view, sure, it is quite a tricky one. The food retailing space is still relatively okay. Again, it's quite a difficult space to operate. And so I'd probably try get closer to more the informal agriculture space. I think transport is still going to be a growth sector now. Whether you're looking at food deliveries, whether you're looking at trucking or warehousing, there's a lot more goods moving on the roads now because of the need for them to be transported in one way or another. So I think transport is an interesting sector. I think warehousing is an interesting sector in the short term as well as the long term. And yeah, I think it's a complex market to be looking at now, but I think food is a relatively defensive sector, and as I said, I think it is hard to crack the space, but I think there are various ways in which now people are becoming smart. Some people, for example, are opening online food baskets, kind of grocery baskets, and say, if I can sell you a basket for cheaper than buying the individual parts. And so a lot of these food clustering baskets that you'd ordinarily also see around Christmas time in the stores, people are starting to look at those as ways of playing, and then they do their own self-deliveries, etc. And so I think food in general is an industry that tends to be quite defensive, and the various ways in which you can play in that sector. And so it is, I think, will remain quite an interesting one. And as I said, I think transport is looking quite interesting right now, and warehousing for sure.
What do you? I've got about 5 friends in my immediate circle who've decided to take out long-term leases in coastal towns, farms, game farms, and the like. That surely is going to have a significant impact to those towns. Those towns, take Plettenberg Bay, used to only peak twice a year. Now they're going to have a constant flow of customers and increased demand during off-peak times. Have you given that any thought?
Which sectors specifically are they operating in?
Let's take the restaurant sector, the food sector. So restaurants now, in my mind, can expect more custom during off-peak times because people are doing this. They don't need to be at the office. They're working remotely. And I literally know five people. 2 have taken out long-term leases at Kenton-on-Sea. So now Kenton-on-Sea can expect a surge during these times.
Yeah, I think I mean, it's a tale of, South Africa is always a tale of 3 stories, or, you know, where there are income pressures that are coming to households in general. And so a lot of the consumer-led sectors are still going to see a second wave, I think, of pressure from reduced consumption. But I think there are people, and you know, in any crisis, there are winners and losers, and I think there are people who've been winners in their various either employment roles or in their various businesses, and their disposable incomes are increasing, and so, you know, Kenton-on-Sea, Platt, and a lot of those tend to be relatively more affluent areas, and so I think you can be smart around also the segments in which you operate. And the kind of pressure points that you can feel in those segments. Outside of that, this idea around small town revival is a very interesting one for me, and you know, it's one of the things that I've made quite a bit of noise about, and I'll continue for some time. And I'll make the example again about the Eastern Cape, where 2010, the amount of wool sales coming out of that province was 300 million. And as of last year, it was about 1.6 billion. And we are the largest producer of wool in the country and on the continent as a region. Yet there's no industrial base that is close enough to those farms in Berkeley East to be able to sort, clean, and process the wool. And these are the things that would inform the kind of small town revival. And I mean, you know, sheep are going to continue existing with or without the pandemic. And so these are the things that talk around some of the sectors that can be defensive and can be informed by a certain kind of long-term investment strategies that would certainly help these ailing small towns. And so I think you certainly got a point there around how we must think about opportunities that are presenting themselves now as ways in which we can play in some of the smaller or not so large metro areas in the economy.
What do you have to say around consumer confidence in the next 3 years? And I mean, it's very, very different because we're starting from a very, very low bottom, but presumably consumer confidence is going to be on the up. What impact will that have?
Again, it depends on eventually what becomes our focus areas. If we, I'll make an example, focus on, you know, extending our participation. So we are the largest miner of manganese in the world. And manganese goes well into steel production as well as a lot of the other industrial processes. If that becomes, for example, our direction from an investment point of view, saying we want to leverage manganese as a sunrise sector for South Africa, that might not have direct implications, for example, on the consumer confidence side, but you'll see that coming out of the business and manufacturing production numbers. So I think I always try to look at consumer numbers in context of all the other numbers around and saying, you know, they tend to, what gives in one space can take in another, and sometimes they can grow in one direction. So I think while consumer confidence is gonna bounce up off a low base, and the numbers are gonna look like they're accelerating faster than they actually are in the real economy, I think that is important for sentiment as well. It's important for driving investment because it builds confidence around the role of particularly a consumer or consumption-led economy like South Africa, where 60% of our GDP is informed by household expenditure. So it certainly does help in terms of particularly the investment bringing confidence into investment for consumer-driven sectors and subsectors. And so when we see that turnaround or the bounce up, I think it should be positive for ultimately what would then also become some of the production sectors because of the investment that follows.
Yeah, thanks for that. Moving away from SMMEs, I'm super curious just to as part of this wrap up, if you just give us your views on the stock market in the US. I mean, what on earth is going on? You know, we've seen Apple double in share price, over double in the last 2 years, and it's flying. Now, surely there's a paradox there. And what's that about?
So there are a number of things that are informing that. So you can see that the US president is a proponent of protectionist policies. And what that means is that we've seen them target, for example, executives, Huawei executives, and jail them. And we're seeing the pressure points on TikTok. The president signed the order last night that I think within 42 days, no one's allowed to transact with TikTok. And so again, what this will probably do is that if the Microsoft deal with TikTok goes through, it'll broaden their access to a consumer base that, you know, on probably cheaper valuation than if the market structure was open for them to approach TikTok and say, we want to buy your American subsidiary. And so from a shareholding point of view, that's great, right? And so the Microsoft stock is probably already trickling up on expectation that they might acquire the US-based, branch or quarters of TikTok. And so what the point I'm making is that the protectionist policies themselves are in favor of the American-based tech firms. Because then you make it very hard to compete, and they become, I think, increasingly larger organizations. We're also seeing, for example, just how advertising revenues have moved to Google and Facebook, and that's informing a lot of their growth. And so magazines in South Africa are closing down. Radio stations are under a lot of pressure. TV stations are under a lot of pressure because of digital marketing and the way in which it has disrupted advertising as a whole. And those are some of the things that have contributed to the valuations that you're seeing in the tech firms in the US, over and above the fact that there's an anomaly around how investors have tended to look at those stocks. They've always, I'm trying to find a less technical way, but they've always looked at them as growth stocks. And therefore, they always price in, a lot more uptick in terms of its propensity to grow. And we saw that with Naspers as well in South Africa, where the share price went from about 300 Rand to 1,500 in a period of 18 months, right? And then from 1,500 went to 4,000 Rand in a shorter period. And when you look at what their model, I mean, it was Ping An. In China, it was gaming, and no one had imagined that gaming would take over as the largest contributor to the revenue there. And so these are all the things that are interesting from a tech point of view around how this 10x technology kind of impact is that technology is resulting in businesses growing 10 times every in a shorter period of time. And this is why these stocks certainly have been rising at the pace at which they're rising, supported, as I said, by the policy, energy, or the direction around protectionism from Trump. I think that certainly made life a lot easier for some of those players. I mean, Samsung's also got now some restraints around what electronics they can't bring into the US, et cetera, et cetera. So there are a lot of things that are informing, I think, that big push coming in the tech space.
Last question from me. What do you historically, when Democrats come in, there's a bearish view when it comes to stocks because of the socialist policies and the raising of tax to achieve those policies. Now, if Biden were to win, do you foresee a flattening of the stock market? Do you see there potentially being a surge because of a bullish market because of the fact that now the economy is going to be regularized? Mindful of something, and what I ask you to be mindful of is I don't think taxes are going to be increased. So in other words, the Democrat president would actually have to maintain the current level because of COVID and because of the economy. So would there be a change to the customary anxiety that the Republicans have when a Democrat takes over when it comes to taxes and the economy?
Yeah, I mean, we've seen that also, I guess, and I guess markets like to ignore some of the information, that tax cuts don't necessarily result in high economic growth. And that's been proven empirically in many instances.
Oh, your mic has gone off and sounding, try again.
Can you hear me now?
Yeah, it's just it's digital on my side. Is everybody else hearing correct? Okay.
You sound like you've turned into a robot, Sifiso.
Yeah.
Maybe mute and unmute.
Is that better?
Okay, so let's just conclude. If we can hear what you're saying, it's just not pleasant.
So I do agree that I don't think Biden will come in with any tax hikes. I think he'll try to create as accommodative as an environment as possible. He's also coming on, he'll probably be inheriting, of course, higher unemployment, as we've seen now those numbers research again. I think last week with 1.4 million jobs lost in the week. So he's going to have to focus on building capacity back into the economy. And of course, I think now with oil prices again quite high up and expected to average between 40 and 45 US dollars, the fracking industry, I think, becomes quite interesting all over again. And of course, the agriculture and automotive sectors. And so I think his focus is probably going to be more around capacity building and looking also at more inclusive economy. And I think that tends to work very well for the value stocks. And so the Berkshire shares and all of these deep value stocks will certainly price in a lot of long-term growth. And you probably see lower volatility in what we often observe as the VIX index. And so that again tends to be quite more positive for the value stocks and less so for the growth stocks. And so I'd say there's more a fundamental, almost a reversion towards more fundamental investing that would probably follow a democratic or a Democrats in power type of marketplace. So it's a utilities-driven type of industry growth that we can see.
Great, thank you. Thanks to the attendees, thanks to the panelists. Please join us on Tuesday for another insightful webinar at 10 o'clock. Until then, have a great day and have a fantastic weekend. Cheers.